How you doing today, guys? It's Ralphie from Beyond the Huddle. Welcome to this week's Bitcoin forecast. As you guys know, I'm going to start off by talking about the COT, then we'll move on to the margin accounts, and then we'll wrap it up with some price action to give you guys the levels that I'm looking at on the short term and the long term that could potentially either keep us bullish or turn us bearish. So if there's anything you guys don't want to see throughout the video, make sure you skip to the part that you're interested in. So let's get started. Okay, guys, so getting started here with the COT section, we can see that this is the positioning as of Tuesday, October 12th. That's the past Tuesday that just happened, and we can see they increased their positions by 209 to 696, and we can see that they decreased their shorts by 79 to 320. Now, I will have to say, because I've been keeping track of this for the past 12 to 11 months, so almost a year now. These positions, this has been the largest I've seen in a single weekly change, okay, for the longs. We've seen shorts decline by this amount before and also increase by this amount before. So that's why I said it's a huge decline in longs, and it's also, just a large decline in shorts because we've seen that before. But the biggest thing I want you guys to take out of this is that the asset managers have finally used conviction, okay, and that's the biggest thing I want you guys to get out of this, because before the problem was yeah, we were net long, but the asset managers hadn't really decided again in one direction or the other, and we'll show you in the chart very shortly what happened last time they they had conviction to one side. But yeah, this is what we've been waiting for. We didn't know if it was going to be to the short side, if they were going to be more short, more short than longs, or if they were going to go ahead and add more to their longs and decrease their shorts. And well, now we got our answer. So because we got our answer, we can make better decisions. And you can see right here, if we zoom in on, wrong one. If we zoom in on this one, last time this happened was right here. So I'm going to draw a little arrow there, or a little horizontal line. So we're going to make this a different color because these lines are for something else we're going to talk about later. So we're going to make that white. So you can see right here, the last time they started to decline. Now you wouldn't have known it peaked here. So let's move it 1 week over. So there you go. This is the first time that you knew that the percentage had peaked, and I think it peaked at around 74%. Now we're only at 68 right now, so you can see back then that led to just a couple more weeks of bullishness, and they had started to decline their position. Now yes, this data is delayed, so actually no, I'm sorry, so we would have known that they were bullish here. There you go, right? Because that's when this week closed here, that led us to a 74% more longs than shorts. So there you go. When this weekly candle right here came out, then you knew you had 1, 2, 3, 4, about 5 more weeks of bullishness. Now again, this is 74%. Right now we're only at 68. So the question is, can we keep this percentage, right, this unequalness, this conviction in the longs up for more time? I guess the data will have to show us week in and week out, but that's what we're talking about right now. Now, the next thing I want you guys to notice is the longs are back above the average, so that definitely suggests for us that obviously the long side is getting fed, and now look at the shorts, they're below the average. I want to take you guys back to 2019 here, and I want you to imagine how you would have reacted back then, because there's two different ways. I've been hammering to you guys that I wanted to see the short positions be near zero, and that would make me feel more comfortable about a parabolic 500% rally like what happened in September, right? You can see that the longs were being fed to the upside while the shorts were non-existent. That led to this crazy rally. But look at what happened back in 2019 right here. If we draw a horizontal line right there, you can see that the shorts peaked and the longs bottomed, right? So we move it over 1 week, because that's when you would have gotten the data, and now you know that the longs, the shorts have started to drop and the longs hadn't moved, right? So that would have told you, I wonder if this is a low. You can see right here, this is your discount buy, and then obviously the market rallied 300%. Now why would you have seen that coming? Because even though the shorts were still high, there was 360 something contracts at this moment in time. You can see right here that they just constantly kept declining the contracts. Now it tried to peek its head here, so maybe we would have been a little bit scared or confused that week, but then the next week they quickly fixed that problem, and then we never went back above the average. You can see right here until this low right here, and guess what? that low right there happened, guys, right at the high. You just can't make this up. Again, this is not a timing tool. I don't want you guys to think it is. And actually, you wouldn't have seen the data then. You would have seen it the week after. But either way, this is not a timing tool. We use price to confirm this data, right? So we would have seen on a short-term weekly level, the weekly levels I give you guys every single week, you would have known that there was a reason to expect a high there. And then the week after that, you would have seen the data would have come out and you would have seen the shorts have picked up, right? So you would have seen these shorts pick up, and you would have been like, oh, okay, now everything makes sense, right? But the key here that I want you guys to take away is that as long as the longs are increasing and the shorts are declining, we don't have to be at zero like back in September to expect a move higher. And that's what's happening right here, right? The longs are picking up, and the shorts, although they're at 334, I'm not in love with that, because to me that signals that they have a reason to be uneasy about the market and believe that at any moment in time there's going to be some sort of move lower, right? Maybe this is what causes the 30% move lowers during the uptrends, right? Who knows? But again, the perfect scenario would have been, you get an aggressive move lower like we tried doing here, and then we move on to zero in the contracts, but that didn't happen. So again, I just want to point out to you guys that it could happen that we have a decent amount of contracts open in the shorts, but it is okay as long as our price action, weekly short-term signals keeps us bullish, as long as our monthly signals keep us bullish, and then the longs are feeding that trend. That will offset these shorts. Okay, so moving on right here, we can click this again, and remember, now we're, again, we're at 68, and that's about it, guys. So one thing that Misha did want me to mention to you guys, if we look at this right here, because the data is delayed, this arrow is when we would have had the data. Okay, so we got the data on Friday, and to be more exact, we got it at like 3 o'clock, right? So that's 4 o'clock, 16, but I'm in a 4-hour chart, so work with me here. So you can see somewhere around in this candle, well, actually somewhere in this candle, the previous one, you would have had the data, and you can see that this rally right here. So if the data wasn't delayed, if we always got the data right when Tuesday closed, we would have been able to act on it and then be up 10%. However, because the data is delayed, and if you're trading just based off the data, and you wouldn't take any positions without seeing that confirmation first, you would have been buying somewhere around here. And you can see right here the zone got retested, and that's our weak level, by the way, which I'll mention and expand on later. And then now obviously you'd be in profit still, but that's the whole point that I want you guys to get across here, is that you're not using this as a real-time thing. That's what we need, these blue, these green zones and these purple zones, and also the SMPDT to be our support and resistance levels, to then use the data around it. So obviously we've been short-term bullish and long-term bullish since the quarter started right here, because our levels kept getting respected to the upside, and now we're getting the confirmation. So remember, with that, just by them being that long, that told us you can short-term buy. Now that we're starting to get some confirmation, a conviction on their side, what does that mean? Well, if you said that we can start to swing trade or position trade, you're 100% correct. So back then, I was looking for any movement in this weekly level to get me out of the trade, right? So maybe this one got me out of the trade, then when it revalidated it, maybe I got back in. Again, I'm short-term trading. But now I want to start to look for swing trade, position trade opportunities based on what the COT is telling us right here, right? That we're starting to have conviction to one side, 68% long. So as long as that stays high, as long as it stays strong, that's how you guys want to think of it. Am I a short-term trader trying to, maybe be in and out depending on my support and resistance levels, or am I more of a long-term trader? So let's wrap it up. This was quite a long video here. Let's move on to the margin accounts. Keep that nice and short, and then we'll move on to the price action. Okay, guys, so moving on here to the margin accounts here on Bitfinex. This is BTC USD, the shorts, and that's, because we're a little short on time here, I want to keep the video under 15 minutes. The shorts were the ones that we wanted to see go above the quarterly open, which is also the monthly open, and if it was able to successfully do so, then our target would have been this yearly. Right, and then when the yearly gets broken, then the ending target would have been this premium right here. Now, as you can see right here, let's go on 4-hour chart. We have tried getting some rallies, so this is actually quite a large rally right here. We had about a 77% rally in the shorts that got rejected where? Well, there's a premium swing high here to this swing low here, and it got rejected right at the monthly/quarterly open. And this has been used as resistance ever since we broke down below it right here on the 4th of October. So, you know, you can draw like an imaginary horizontal line here. And I don't know why the entire video I've been saying vertical line when I was talking about I've been saying horizontal line when I've been talking about the COT when I really meant to say vertical. So don't worry, I made a little edit for that. But nonetheless, when we look at this horizontal line here, you can see that we went below it here, we went above it here, and that kind of got us to start thinking about, hey, maybe we could potentially see the yearly. But look what happened. Right after, we went right back below it, which means we no longer expect it. Again, we try to pop our head back above it again. What did we do? We came right back into this supply zone right there. And then that caused us to have some more resistance. And now ever since then, resistance here, and right here, another resistance. So at the moment, guys, I don't see a reason why these shorts are going to go higher, which means that the upside, we're safe for now. But again, if I were you, I would keep a very close eye on this. I only go over it once a week. So on your own time, if you want to go to this same exact chart and put an alert right here, just say add alert, and then maybe, again, if this ever gets broken to the upside, the next target would be the yearly, and then finally this premium. Now, if that ever gets hit, I'm telling you, the market will nuke. So that's very, very scary if it ever were to happen. So again, look at that. Under 3 minutes just to talk about the shorts. We're doing this good. So let's move on to the price action and wrap this video up. Okay, guys, so welcome to the price action part of the video. Let's see if we can wrap this one up within 3 minutes. So a little challenge for myself here. So as you can see, of course, like always, we're only interested in 2 different levels, right? That's the monthly, which is what we call the long-term level, and the weekly, which is what we call the short-term level. And as you can see, ever since the quarter started, which is the monthly open as well, we were already above our monthly level. Okay, so that suggested some, you know, long-term price action, and what a surprise! Ever since that quarterly open, we're already up almost 43% at its highs, right? That's how much it went up. And again, week to week, we keep track of this green line right here, which is what tells us what our most nearest to the market structure is, if you want to think of it that way. As you can see right here, we tried. So actually, this is last week, so that the structure wouldn't have been that way yet. So as you can see right here, once the week started, we dipped right into the weekly structure, well, the level that holds our weekly structure if we wanted to stay bullish. And look at the really, really nice reaction that we had from it, about a 4% move higher. Now, the challenge is, well, we're starting to get another fractal here, kind of like what we just had to start off the week, where we have a swing low right here, and then we have a swing high right here. And then we're just dipping right back into the discount, right? So if we can see some sort of a, you can see right here, that's the demand. But if you're talking about a discount, we definitely already hit it. Yep. Oh, no, we actually missed the discount as well. So see, right now, we actually didn't go far enough for either the discount or the demand zone. So that'll be pretty interesting. Again, this is what I'm trying to look at right now. There's only two things I'm looking at for price. Is, are we going to hold this weekly level and go back the weekly short-term level to keep us bullish, and are we going to go back above the weekly open? If we can successfully do both of those 2 things, which by doing the weekly open, this one has to be true, then we can start to, you know, expect higher prices and obviously all-time highs, which the COT is suggesting, right, that as long as we keep adding longs, because we're 68% more favored to the long side, we're aggressively committed to that side. The asset managers are, in which case, I would be looking for, if there is any invalidation of this green zone, right, if we do go below it and we turn short-term bearish, remember, you're going to be short-term bearish into a long-term bullish, because our bullish level is all the way at the low. It is not out of the ordinary, guys, to see a 20% move after an aggressive rally in this market. And that 20% move would be a buy the dip scenario. Now, I'm not suggesting what you do with your money, but that's how I would be handling it. I would be looking for this 20% move to hold, and then, you know, this swing low, this swing high. obviously at that moment in time, depending what day it is, we would also want to see, has the information in the COT changed, right? As we're hitting, if we ever do happen, right? I'm not suggesting, this is just a potential. If this does happen, and look at that, we're already at 3 minutes, so we got to wrap this up. If we do happen to hit that level, is the COT still 68% long? Did the shorts increase or decrease? Did the longs increase or decrease? See, so every step of the way, every time a move happens, we go back, check the data. We go back, confirm, how are we looking? Are we still strong? Are we still weak? And so on and so forth. So there you have it, guys. Those are my two scenarios. We're either going to respect this green zone right here, and we're going to go higher to new all-time highs, or we could, if we lose this, the next level would be this daily demand. But again, I wouldn't be wanting to make decisions until we reclaim this green zone. So if we lose the green zone, I'd be waiting for this one. If not, I would be looking for this or this blue zone to give me some potential reversals. So with that being said, guys, if you like this video, make sure to share it with your friends and family. Give it a thumbs up, subscribe, maybe comment if you have anything to say. And I'll see you guys next Monday. Make sure to tune in during the weekend on our Twitter for the COT data like this right here, that we'll go ahead and just make a post about it. And make sure you tune in tomorrow to listen to Misha talk about some altcoins, what we're thinking, what we might be experiencing, or if we're into any trade. So with that being said, guys, I'll see you next week. Peace.